things like a subsidiary. This is things I've already introduced on. So we have a subsidiary. So a subsidiary is whereby the parent acquires more than 50%. That is more than 51. Because now exactly 50%, the other invested company which is acquired is called a joint venture. So we have a subsidiary, we have a joint venture, we have an associate. An associate is whereby the parent acquires between 20% and 49%. So you need to know how to consolidate subsidiaries. So you need to know how to consolidate subsidiaries. You need to understand how to consolidate associates and joint venture. And this can appear in one question. So associates and joint venture are accounted the same way. That is using International Accounting Standards 28. That is, it's called equity method. So sometimes back, I think we have pre-recorded videos. These are the videos which are prepared early enough, so that once you watch these videos, then an online class will be an additional to you. So if you have been watching my videos right now on group accounting, like now this class, that is a one-on-one class now we are having, will be an additional. It will be easier for you to understand the topic, because already I've tackled many questions on group accounting. So that now I think you have many questions you are supposed to ask. So it's not that this is the class you are supposed to depend most in order to understand group accounting. First, just try to go through the videos which are in the relevant software, which you are capable to access. Then now when I have an online class like this one, it is an additional to you. That's why I always ask some questions in the WhatsApp group. So we can go direct to the November 2015. So also the guys from Facebook Live, I think you are free to ask questions. The people who will be having time to watch this online class through the Facebook part of it, so that you can be able to understand more. So let us read the question. That is, I will display the question on the screen so that I interpret, so that we can tackle. So let me display the question. That is November 2015. So the November 2015 question 5. So November 2015 question 5. So this is the question. So the question reads, the following is an extract of financial statements of A, B, and C Limited for the year ended 30th September 2016. Income statement for the year ended 30th September 2015. So you have the relevant income statement. Never go through it. You are reading revenue, cost of sales. You know that income statement consists of incomes and expenses. So you just know that is an income statement. The next, we have a statement of financial position down there. Statement of financial position here contains assets and liabilities. So the main thing now, you go direct to the additional information. So if you are capable of interpreting the relevant additional information, then now tackling the question will be a thing of the past. So you will be talking about now moving to the next section, because once you pass this paper, I think the others are easy. So additional information 1, A Limited acquired 40% of C Limited on 1st October 2014 for 700 million. So A is the parent, acquired 40% of C Limited. So it means that when it acquired 40%. So the other company is called an associate. So C is an associate to the parent. That is, C is an associate to A Limited, because it rises between the percentage of 20 to 49. So for shillings, 700 million, which means that it paid 700 million to acquire C. A paid 700 to acquire C. Number 2, that is, A Limited also acquired 80% of the ordinary shares of B Limited on 1st January 2015. That is, A Limited also acquired 80% of the ordinary shares of B Limited on 1st January 2015 at a cost of 3430 million. The fair value of non-controlling interest at this date amounted to shillings 800 million. So I think I can ask one of you guys to be able to explain to me, what does a fair value of non-controlling interest, the statement on note 2. Like now I've seen that you have said A also acquired 80% of the ordinary shares of B Limited. So when it acquired B, 80%, so 80% is more than 51, which means that B Limited is a subsidiary. Then they said the fair value of non-controlling interest at this date amounted to 800 million. So Pamela, these questions comes to you. So what does the statement, the fair value of non-controlling interest at this date imply?
It means the amount.
Sorry?
The amount that it is not controlling B up to 800 million.
So Ari, a trial? Ari, Ali?
Note 2.
So yes, note 2. The last part, they are saying that the fair value of non-controlling interest as at this date amounted to shillings 800 million. What does this statement imply?
The fair value of non-controlling interest.
Yes. Do you remember me talking about goodwill?
Yes.
So which method do I use to compute goodwill?
Goodwill.
Which method do you know when I am computing goodwill?
Oh, yeah. Straight line.
No, full method and partial method. Eh?
Yeah. Full method and
partial method. So when they talk about fair value of non-controlling interest, so remember that when we are computing goodwill, when I am computing goodwill, you can use either full method, either full method or a partial method. So when you are using full method, always you must be given the fair value. Right now, remember that A acquired B. B is a subsidiary. So when A will be computing the goodwill of B, he is supposed to use full method. Why? Because the fair value of non-controlling interest has been stated at its fair value. So which I mean that goodwill, so first you know that goodwill, so goodwill is all about, so I can talk a bit about goodwill. So goodwill is the economic interest expected from an asset. Goodwill is an economic benefit expected from an asset. That is the definition of goodwill. So when we are computing goodwill, like now here they have said A acquired B. B is a subsidiary. So when A will be computing the goodwill of B, is supposed to use a full method, because in order to use full method, the relevant investee company must be stated, that is, the subsidiary must be stated at its fair value. That is the non-controlling interest. I'm talking about non-controlling interest. So the non-controlling interest, that is the non-controlling interest must be stated at its fair value. So that is the case when you are supposed to use full method, when the NCI is stated at its fair value. Then now, when you are using that full method, the goodwill is either attributable to the parent goodwill, the goodwill arising from that use of full method will be attributable to the parent and then non-controlling interest. Then when we talk about another method is called partial method, another method of computing goodwill, that is partial method. So in order to use partial method, there will be no statement that the fair value of non-controlling is this value. Like now, if we were supposed to use partial method to compute the goodwill of B, they could have not provided that statement that the fair value of non-controlling interest is this value. So I think that is well understood, Ari, and the others.
Yes, well understood.
Yes. So we can continue with.
Excuse me, Wali.
Yes, you can ask.
So what does what is the meaning of the fair value of non-controlling interest? What does it mean?
It means that the non-controlling interest, is stated at its market value, fair value, yes.
So it's a fair value of. So what is the 800 million? What does it
So
mean?
the 800 million is the value which will be attributable, to minority shareholders. Are we together?
Oh,
Yes, yes. So that
yes.
statement implies that you are
It's
supposed
okay.
to. So that
Yeah.
statement implies that, Pamela?
Yes, it was.
So that statement always implies
Yes.
that you go for the full method when computing
Third,
good.
when everything the goodwill. Okay.
Yes,
Noted.
yes. So if there is no such statement in your question, you are supposed to use partial method.
Okay.
And in partial method, there is no goodwill which is attributable to the non-controlling interest. Are we together, Pamela?
Yes, we are together, Molly.
Yes, yes. Again, always that's why I have said that if you could have gone through the introductory part of group accounting. I have done a very good introduction on the pre-recorded videos. Pamela?
Okay.
Yes,
Yes.
at the same, this is enough. Even also, if you can be able to understand this, it's enough for you to tackle any question of group accounting. So let us continue. Let's continue to the interpretation of note 3. So display.
Okay.
So when we talk about note 3, they are saying the fair value of B Limited's property, plant, and equipment on the date of acquisition was 210, above the book value, with exactly 5 years, remaining on the useful life of this property. So we have said that the fair value of B property, plant, and equipment. So when you hear about this statement again, these are common things which are always in any group question. So in group accounting question, we have something called revaluation. So revaluation is the difference between the fair value, and the book value. So if there's a difference between what you have recorded in the books, let's say you have done valuation of your assets, and in your books you have recorded your assets at a certain value. But now in the market, these assets are trading at a different value. So the difference between the two, that is the book value and the market value, is revaluation. So sometimes, yes, the examiner would always provide the fair value and the market value. Always the market value would be higher. Than the book value. But in some scenarios, he will just provide the revaluation direct. Like now in this statement, he has provided revaluation direct by saying that the fair value of B Limited's property, plant, and equipment on the date of acquisition, the fair value of B's property, plant, and equipment on the date of acquisition was 210, above the book value, with exactly 5 years remaining on the useful life of this property, with exactly 5 years remaining. So this implies that they have said that it's up 210 above the book value. So if the book value was 500, this figure is at, let's say it's above 500. That is, it would be at 710. So it's above the book value. It's above the book value by 210. So sometimes they would use the word below. Below what? Below the fair value. Sometimes they would use the word below the fair value. Or they can say above the book value. So again, Pamela, are you getting what I'm trying to explain?
Yes.
Yes. So I've said that they can use two scenarios, two statements to imply the